Welcome back to another video, everyone. In this video, we are going to break down what is volume. We are going to break down how does volume help us. We're going to break down aggressive buying versus aggressive selling, strong and weak moves, and we're going to go over some volume examples. So volume is a very, very, very important thing that we have to focus on in trading. This is something a lot of people, when they get started in trading, and people that are even actually trading for a very long time, don't focus on. So I want you to pay very close attention to this topic because volume is very, very, very crucial to identifying a lot of strong moves, a lot of weak moves, and so on. So first and foremost, what is volume? So volume showcases the total number of shares traded. Traded meaning bought and sold. So once again, volume showcases the total number of shares traded. Basically, it shows us the total number of transactions that happened, right? So for example, let's say Mike wants to buy 4 shares. If Mike wants to buy 4 shares, Mike has to find a person that is selling the shares. So Bob, let's say, in return, wants to sell his 4 shares. So if Mike wants to buy 4 shares, Mike has to buy them from someone. So if Mike buys 4 shares from Bob, Bob has to sell his shares and find someone who's interested in buying, right? So this works hand in hand. They both need one another. Now, if Bob sells his 4 shares and Mike buys 4 shares, what do you think the volume is? Right? This is where it gets very confusing. A lot of people think the volume here is 8. But in reality, the volume is not 8. The volume here is 4. Right? Because remember, volume represents the total amount of shares traded. So how many shares were traded here? 4, not 8. Mike, once again, bought 4 shares. Bob sold 4 shares. So the total number of volume is 4. A lot of people, once again, get this confused and think it's 8. But in reality, it is not 8. It is 4. Now, looking at volume, this is where volume is found on a stock chart. So if you guys look down here, you guys can see this is where you can read volume. The volume number showcases you how much shares were traded right here. Now, a few things to identify and understand is, number one, how does volume help us? Right? So volume measures the commitment behind a stock's price movement. Right? Volume helps us identify if buying pressure or selling pressure is increasing or decreasing. So once again, volume is going to showcase if there is a strong move or if there's a weak move. Volume also showcases liquidity. Now remember, if there's high liquidity, that means it's easier to get in and out of a stock. If there's low liquidity or very low volume, it's very hard for you to get in or out of a stock. Volume also showcases strong and weak moves. So if volume is high, depending on the candle formation and other stuff, that will help us identify if the move up is strong or if the move up is weak. Volume will also help us identify if the move down is strong or if the move down is weak. So once again, volume is extremely important. You need to understand volume at a very, 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 very deep level. Volume will showcase us if buying pressure is stronger, selling pressure is stronger, and basically who is in control. It will show us if there is commitment behind the move. So I'll break that down. Now, a few things to understand about volume. There's no such thing as more buyers than sellers or more sellers than buyers. So just to recap, if I buy 4 shares and Mike sells 4 shares, the volume is 4, not 8. So there's no such thing as more buyers than sellers. That does not exist. A lot of people get that confused. They think, okay, why is the stock going up? A stock is going up because there's more buyers. No, there can't be more buyers than sellers. There can't be more sellers than buyers, because if the volume of a stock is 1,000, that means 1,000 shares have been exchanged between 2 parties, right? That's what that means. Does not mean that more people bought or more people sold. For every buyer, there needs to be a seller. and for every seller, there needs to be a buyer. So if you buy a stock, right, you're not just buying it from mid-air or from absolutely nothing. You're buying it from someone, be it an institution, be it a market maker. If you're selling it, you are selling it to someone, be it a market maker, be it an institution, be it someone else, a real trader, a retail trader, whatever the case may be. But just keep in mind, when you are buying a stock, you are buying from someone else. When you're selling a stock, you are selling it to someone. Volume showcases a transaction between a buy and a sell order. So if someone buys a stock and someone sells a stock, right, the volume of that is 1 because there's a buyer and a seller that exchange the shares. So the volume is 1. So there's no such thing as more buyers than sellers or more sellers than buyers. Keep that in mind. For example, right, let's say we look at stock BYND. So on this day for BYND has volume of 1.3 million shares. Exactly 1,341,900 shares were traded this day. Volume is showcased here for the day. So if you look right here, you can see the volume for that day. If I go over this day, it'll tell me what the volume was that day and so on, right? Now, if I go here, this means that 1.3 million shares have been exchanged this day. Now, when you look at this day, the question people have is, all right, I got it. 1.3 million shares have been exchanged. Does that mean there's more buyers or more sellers? Just to refresh again, there's no such thing as more buyers than sellers. That doesn't exist in the market, right? So this day, this is how many shares were exchanged back and forth from a buyer and a seller. This is the total number of shares. But now, the question people have is, all right, then why would a stock go up? Why would a stock go down if the buyers and sellers are the same? We'll break that down. Now, volume example, just to refresh again, if there's 1,341,900 buyers, right, and the same amount of sellers, what is the volume? The volume is 1.3 million. It's the same amount, right? Once again, if there's this many buyers, for every buyer, there needs to be a seller. If there's this many sellers, there needs to be buyers. The volume equates to the total amount. You do not add these two numbers, just to refresh again. And I'm bringing the same example up over and over again because I want to implement this in everyone's heads, that there's no such thing as more buyers than more sellers. Volume just represents the total number of transactions. Now, since that's out of the way, the question people have is, so why does a stock go up or down, right? So if the buyers and sellers are the same amount, why does a stock go up or down? So we have two sides. Like I mentioned before, trading is all an auction house. We have bidders on one side, and we have sellers, known as the ask, on one side. Now, trading is all an auction house. So since it's an auction house, we have bidders on one side, we have sellers on one side. Now, since there's no such thing as more buyers than sellers, there is something that exists called more aggressive buyers and more aggressive sellers. Once again, there's something called more aggressive buyers and there's more aggressive sellers. There's no such thing as more buyers and more sellers, but there is a thing called more aggressive buyers, buyers that are more aggressive, willing to buy at a higher price, and aggressive sellers, people that are willing to sell at a lower price. So let's understand aggressive buyers and sellers in volume. So what does aggressive buyers and aggressive sellers mean? So let's take a very basic example so we can get a good understanding. Let's say Joe wants to buy an iPhone for $800. Joe right now does not have an iPhone and he wants to buy an iPhone for $800. That is his bid price. That's where he wants to buy the phone for. Now, on the other end, let's say Mike. Let's say Mike has an iPhone and he wants to sell his iPhone for $1,000. So once again, Joe wants to buy an iPhone for $800. Joe doesn't have an iPhone. Mike wants to sell his iPhone for $1,000. So now the question comes, how do we identify who's more aggressive, the buyer or the seller? So let's say, for example, the transaction happens. In situation A, transaction happens for $800, right? So this transaction happens between them two. They negotiate a price. The price to negotiate is for $800. So if the price is negotiated for $800, who is more aggressive? And I want you to think about that. Once again, Joe wants to buy an iPhone for $800. Mike wants to sell his iPhone for $1,000. The transaction takes place and happens for $800. As the transaction happens, who do you think is more aggressive? The buyer or the seller? Think about that for a second. Now, as you're thinking about that, the proper answer is seller. Mike is more aggressive. Why is Mike, the seller, more aggressive? Let's go back and recap. Mike wanted to sell his phone for $1,000. That was Mike's price. Mike's like, this is how much I want to sell it for. Joe wants to buy it for $800. Now, when they both negotiate, the final price is $800. The final price comes to Joe's $800 price. Since it comes to Joe's $800 price, right, that means Mike was more aggressive on getting rid of his phone, and he sold it to Joe at the price Joe wanted it for. If Mike was not aggressive and he didn't need to get rid of his phone, or he didn't really care about selling it for a lower price, he would have transacted the deal for $1,000. So now if the transaction happened for $1,000, right, who is more aggressive? In this situation, Joe, the buyer, was more aggressive because the buyer came and paid what the seller wanted. That means he was more aggressive. He initially went into the store saying the most I'm going to pay is $800. But after he walked out the door or walked out the store, he ended up paying $1,000, meaning he was very, very aggressive. But now if he walked into the store, if Joe walked into the store and he only paid what he wanted to pay, that means the store or the seller was more aggressive. And this is something we can see on level 2. I'm going to break down level 2 more once we get to it, but this can be seen on level 2. You can see where the buyers are sitting, where the sellers are sitting, where the transaction happened. This could all be seen in the market. But understanding the concept of aggressive buyers and aggressive sellers is extremely, extremely, extremely important, right? Just to refresh once again, the transaction happens for $800. That means who is more aggressive? That means the seller lowered his price and he sold it for $800. If the transaction happened for $1,000, that means the buyer, right, was more aggressive because he went to the seller and paid what the seller wanted. So just make sure you understand that concept, because understanding that concept of aggressive buyers and aggressive sellers is extremely, extremely, extremely important. Now, let's look at some charts and understand what aggressive buying and aggressive selling means. So in this situation, what happens to the price of a stock? The price of the stock is doing what? It's going down. What is happening to volume? It is going up. What does that mean? That means that is aggressive selling. Is that a strong move down? Yes or no? Yes, that is a strong move down. Why is that a strong move down? It's a strong move down because as the price is going down, volume or the commitment level is going up. That means more and more people are interested in selling the stock or selling the product or selling whatever it is for a lower price. In this situation, stock's price is also going down, but you can see what happens to the volume. The volume is decreasing. This is a weak move. That's weak selling. So for example, let's go back to the iPhone example and understand that. Let's say we have an iPhone. iPhone is at $1,000, right? Everyone starts selling it. The price of an iPhone starts going down to, let's say, $250. As the price of the phone starts going down, right? Let's say more and more people are selling the phone for a lower price, right? The volume starts increasing. More and more transactions start happening. As you start going around, you start seeing everyone selling the phone, their iPhone, for a lower price. That's supporting the move down. That's supporting this move because there is commitment behind it. There is a lot of volume behind it. There's a lot of transactions representing the move down. So that's a strong move down. Now, if you take the same example, let's say an iPhone is for $1,000, and there's some people selling it for $250. Now, if some people are selling it for $250, you can see by volume that there's not a lot of commitment, that not a lot of people are interested in selling it for $250. Now, that would mean that that's not a strong move down. Maybe some people sold it for $250 because they needed the money, they had to get rid of it, whatever the case is, but that is not a strong move down. This is a strong move down. This is showcasing that sellers are aggressive with increased volume. Now let's look at another example. Let's look right here. What's going on? The price of something is going up. It's increasing. What's volume doing? Volume is also increasing. What do you think that means? That means buyers are aggressive. That means there's commitment behind this move. That means there's interest behind this move up. That's what we want to see. We want to see a stock backed by strong volume. We want to see a stock backed by increasing volume. That is showcasing us a strong move on the upside. Now, if we take another example, you can see what happens. Price goes up, but less and less people are interested in paying a higher price. This is not a strong move up. This is weak buying. This is a weak move up. We want to see volume correlate with the move. If the volume is not correlating with the move, up or down, it's not supporting it. This right here is supported. This right here is not supported. Weak move. Very, very important to understand that. Now, let's take an example. Now, this is where candlesticks play a role. Like we covered candlesticks, aggressive buying and aggressive selling. This is where candles play a huge role. Now, this right here is a strong green candle, right? Buyers stepped in, buyers were in control till here. Strong green candle, right? This is a widespread, strong green candle. Good sign. Now, just because we see a strong green candle does not always mean that buyers are aggressive. What we also need is we need increased high volume. So in this situation, high volume, strong green candle, that's aggressive buying. That is the combination with the candles. As I mentioned in the last lesson, when we look at a candle, looking at a candle itself is not enough. We need more components. Volume is one of the components. Now, if you have a strong green candle with increased volume or high volume, that represents aggressive buying. Now, if you have a strong green candle, widespread strong green candle, but decreased volume, you can see that's the average volume level. I'll break that down moving forward too. You can see volume is decreasing. That's a weak move. What that is showcasing is the price of something is going up, but less and less people are interested, right? The price of this stock is going up, but less and less people are interested. That's not strong. That means eventually, for this stock to sell more, the price is going to have to maybe come back down. This is once again a weak move. We want to see a stock price going up, and we want to see interest level go high, meaning we want to see more commitment, and that can be seen on volume. Now, if you look here, once again, this is where the combination of the candles and volume kick in. Now, if you look at this candle, you can see not a strong green candle, right? Weak green candle. Why? Buyer stepped in, took it all the way here, and what happened afterwards? Afterwards, sellers came in and sellers rejected the price very, very hard, right? That means bulls are not in complete control, not a strong green candle. Now, what a lot of people confuse is they're like, hey, but volume is up. There's increased high volume. Doesn't that mean that's aggressive buying? Remember, to see aggressive buying, you need a combination of the candle and volume. Volume is there, cool, phenomenal. But what about the candle? The candle's not strong. So the only thing this is telling us is that there's a lot of activity going on. Bulls are not in control, neither are bears. No one is in control right now. It's a weak move. Now, if I see something like this happen, for me to be a buyer, I'd want to see buyers step in and break that level. I'd want to see buyers continue the move up, and I obviously want to see high volume to show commitment. And you guys are going to see moves like this. You guys are going to see candles that showcase themselves like this. Totally fine, but that's where you become a little bit more patient. You wait for a strong move up. You wait for volume to be there with a combination of the candle. This right here is not a strong move. Even if this has high volume or even if it has low volume. Starts off with the candle, then we go to volume. Nothing is going on here. No move here. Now, this is where some people get confused. Who's in control on this candle? Look at the candle first. Who's in control? Candle showcasing this. Sellers are in control, right? So we have a strong, widespread red candle. It's a strong red candle right here. We have increased high volume. This right here showcases the price of the stock is decreasing, right? The price of the stock is going from, let's say, 10 to, let's say, 8, whatever price. It's decreasing. As the price is decreasing, more and more people are selling. That's aggressive selling. Now, some people might say, well, the price is decreasing. People are accumulating. No. People are accumulating. I know how people are looking at that, but what you have to understand is when this move happens down, that is purely aggressive selling. That means the sellers are more aggressive, because if the sellers weren't aggressive, the price wouldn't keep going down. The price would hold, right? But in this situation, sellers are aggressive, which is why the price is going down alongside with increased activity and commitment levels from volume, which are showcasing a strong move down. Now, in this situation, we have a widespread strong red candle, but look at volume. Volume decreases. Low volume. Yes, we have a strong, we have a sell-off. We have a strong move down by looking at the candle itself. But when we go to the commitment level, people are not interested in selling. There's no strong interest in selling this stock. There's no strong interest in people backing this play up. So this is a weak move, not a strong move. Now, if you look at one more example, you can see people look at the body and they're like, oh, it's red. Bears are in control. No, bears are not in complete control. There's a difference of this candle, right? And there's a difference of seeing a candle like this or a candle like this right here. There's a difference of all three of these candles, right? This one is showcasing buyers had some sort of control and they were able to bring the price up. Buyers brought it up a little bit, not a big deal, no buyers here. Buyers were able to drive the price up, right? This is a weak candle, not a strong candle. Just because we see red doesn't mean anything. Look at the wicks. Wicks, a long wick at the bottom, not a strong move down. High volume, doesn't matter. A lot of people are like, oh, it has high volume. Doesn't that mean aggressive selling? Yes, if there's a strong move down. Bears are not in complete control. So this is a weak red candle, increased high volume. Bears are not in complete control, not a strong move. Wouldn't be a fan of getting into this play, and wouldn't be a fan of shorting this, right? For me to short this and for me to take on the trade, I'd want to see a continuation move down. I'd want to see a sell-off. I'd want to see this continue, and I obviously want to see volume pick up or volume stay strong for me to get in on this next candle. Now, in these examples, you can see no one is in control with the candle. Not a strong green candle. It's a weak green candle, decreased volume. Bulls and bears are just fighting without a lot of activity. If volume was high, it would just mean there's a lot of activity. In this situation, volume is low, decreased activity doesn't mean anything. This is not to our interest. Same thing here. Weak red candle, decreased volume. Bulls and bears are just fighting without a lot of activity. If the volume was high, there would just be a lot of activity, but still does not give us any confirmation for a move up or move down. Now, if you look right here, this is a pretty normal move. Small body, red or green candle. It's blue because the color of the body doesn't matter. Small move. You can see decreased volume. Now, these moves tend to happen sometimes, and you guys are going to see, and this is going to click more and more as we progress. Sometimes you might see a huge move up, right? Sometimes you may see a huge move up with increased volume, and then you might see a small body. And when you see a small body, the volume decreases. People are like, oh man, the volume is decreasing. Why is the volume decreasing? That's fine. That's totally fine. And you're going to see more and more of this in price action as we go more over it. But that's totally fine. Not a big deal, right? But now this is where it becomes not a normal move. Small body, red or green candle, the color of the body doesn't matter. And when there's a lot of volume, there's increased activity. There's a question where it's like, why is there a lot of increased activity here? I'll break this down more as we go over more advanced price action concepts, but that's where it's not a normal move. That's where it's like, whoa, what's going on? Why is there a lot of activity when the stock is barely moving? So I'll break that down more once we get to it. But for now, just understand the difference between seeing moves with small bodies, with high volume and low volume. Now the question is, what's considered high and low volume, right? Now every stock has different amount of average volume, which is known as relative volume, also stands as RVOL. So once again, every stock has different amount of average volume. That is known as relative volume. So relative volume showcases how current volume is compared to past trading volumes over a given period. It's basically like a radar for how in play a stock is. The higher the relative volume is, the more in play it is because more traders are watching and trading it. So every stock has an average volume, right? Now, if stock A has average volume of, let's say, 1 million, and the stock goes to 3 million, the volume goes to 3 million, the relative volume will help us identify that. I will break down relative volume more moving forward, but for now, what I want you to understand is every stock has average volume, okay? And depending on the average volume, there's an increase or decrease in volume. If volume is higher than the average, that is a good sign. When volume goes higher than the average, a lot of people are watching that stock becomes in play, and when we go over scanning and finding stocks, right, and building our watch list, I'll show you how to find this and how to search for stocks with higher relative volume. But this, we can find stocks that are in play, stocks that a lot of people are watching because there's more activity going on. But now looking at stocks with higher and lower volume, this is what you have to understand. So let's say we look at stock ABC. When we look at stock ABC, the average volume for stock ABC is 1.2 million. So that's the average volume for stock ABC. Let's say one day or the next day, volume jumps to 2.4 million for stock ABC. So volume increased by how much? It increased by 1.2 million. So once again, let's say on Monday, stock ABC has average volume of 1.2 million. So it's trading, its average volume is 1.2 million. So sometimes it's 1.2, sometimes 1.4, 1.1. It's around that 1.2 million mark. Then the next day, the volume surges to 2.4 million. Basically, the volume increased by 1.2 million. That's situation one, right? Now, the second situation is stock XYZ. So for stock XYZ, the average volume is 66 million. The next day, the volume jumps to 68 million. So the volume increased by 2.6 million. Now, looking at these two examples, I want you to think and don't jump to it right away. I want you to understand this. Like I mentioned before, trading is all about understanding, not remembering stuff. It's all about critical thinking and understanding. So let's understand this. Situation one and situation two. Out of these two situations, which one increased more in volume? So out of these, if you have to pick one and say, okay, which one actually increased more in volume? Which one would you pick? One or two? Right? Think about that and understand that. One jumped up by 1.2 million. Average volume was 1.2 million and it jumped to 2.4 million. So the total increase was 1.2. And stock, in example two, 66 million was the average and it jumped to 68 million, basically jumped by 2.6 million for the day. What's in these situations, which one increased more? Now, if you said number two, you're wrong. Number two, yes, by number wise, it increased more, but overall wise, it didn't increase by more. Let's understand that. So once again, if you pick number two, you're wrong. Number 2 is not the answer. The proper answer is A, stock ABC. So in stock ABC, volume increased 100% from average volume. So that was the average volume. The next day went to 2.4 million. So the increase was 100%. We don't care about the number. We care about the percentage. It increased by 100% of average volume. Stock XYZ increased only by 5%. Yes, it looks like it increased a lot by the numbers, but you have to understand every stock in the market is going to have different average volume. Now, if you're trading, let's say stock A and you're trading stock B, stock A's average volume might just be 1 million a day. Stock's B average volume might be 100 million, right? Looking at what increased the volume depends on the average volume, right? So the average volume matters more than just looking at the number it increased by. So once again, to refresh this, the one that was a stronger move with higher increase in volume was stock ABC because the average volume increased 100%. The volume this day increased to 100% from the average volume, and this one only increased by 5%. And as you look at more and more stocks, I want you to be able to recognize this and understand this and see that, okay, some stocks have higher volume, some have lower, right? It all matters about the average volume and what stock is actually outside of its average volume aspect. All right, so I'm gonna break down some quick volume tips just to refresh everything we kind of went over. So a strong wide green body, something that looks something like this. Get the green color. A strong wide green candle with increased volume is a strong move up. So if you see a strong wide green body and high volume, that is a strong move up. Now, if you see a strong wide body that's a red candle, right? If you see something like this, right, with increased volume, that is a strong move down. Now, if you see a strong wide green candle, right, with low volume, right, volume decreasing, that's a weak move up. I'm not a fan of touching that. I want to see strong volume, right? I don't want to see weak volume, especially if a stock is making a nice move up. I want to see volume pick up. I want to see people committed to that move. I want to see a lot of commitment and a lot of interest behind that move up. I want to see people are interested in paying a higher price. There's no volume, not a lot of people are interested. And then if there's a strong wide red body and low volume, that's a weak move down. So very important to understand this. Obviously, like I mentioned, a lot of trading is about understanding, right? So as we go over more and more examples by the end of this this lesson, right? At the end of this whole topic, you guys are going to see I'm going to start putting things together and going over more and more examples, and more of this is going to start clicking. Now, in this example, you can see, just to kind of look at something that makes more sense, you can see volume is high volume here, weak candle, not a strong move. This is not a strong move. Volume starts decreasing, boom, volume spikes up. Look where volume spikes up. Volume spikes up at the same level where the stock was trying to break out. Stock was trying to break these levels. It was unable to break these levels, and look what happened. And these levels we're going to go over next. In the next lesson, we're going to go over these levels known as support and resistance. I'll show you how to apply them. I just applied them for now. But once again, you can see stock has a hard time breaking at these levels. And once it does break, strong green candle with high volume. Strong move. That's what we want to see. That's a comfortable, nice, strong move. That's what we want to see. We would get into a play like this because there's confirmation here. Now, same example, you can see what happens to volume. Volume decreases. Even though volume was high this day, that's good, but not good enough. Because look, volume is decreasing. It's not at a strong point. So there's not a lot of interest when the stock price got above that level. So that's where looking at volume is very, very important, because once again, it shows us commitment. It shows us if that's a strong move or not. In this situation, not a strong move. I'm not comfortable. If volume kicks in later, maybe I'd get in. But as of right now, I'm not a fan of this move. Now, volume by time frame. Now, if you look here, we're looking at the 1 minute candles right here. Remember, 5 1-minute candles equates to 1 5-minute candle. Now, obviously, if you're looking at 5 1-minute candles, if the volume is, let's say, 10, 20, 15, 15, 15, and we go to a 5-minute candle, the 5-minute candle will obviously calculate all of the volume that was in the past 5-minute candles, right? Just to kind of refresh that for some people, because I know some people have a hard time understanding that. So if the volume of these 5-minute candles is 75, the volume of this 1 5-minute candle will be 75. And just to refresh on candles once again, you can see opening price is lining up, closing price is lining up, the high point, the low point, right? Just so you can understand that concept. Let's just go over some volume examples. So right here, we have a 5-minute chart, a real stock chart, right here for stock Apple. You can see here, stock moves up on a 5-minute chart. We don't really care about seeing high volume here. Stock's just trading sideways, Volume isn't much of our interest. Where is volume interest? Volume is an interest to us on the move up. See that break? High volume, strong move. Takes a break, boom, another strong move. How do we know that? Look at that increase in volume. That is a strong move, right? Now, a lot of people get focused on looking at volume throughout the day, and they're like, oh, I want to see volume go up all the time. Volume is never going to do that, right? Volume is never going to constantly go up. You're going to see when you look at real stock charts, volume is going to look something like this. But when you identify this, we only care about some levels where volume needs to be high, right? We don't want to see, like, as the stock is slowly moving up, right? We don't want to see this slowly move up too. We're not going to see that. What we will see, and what we want to see actually, is volume spikes. We want to see volume spike up on strong moves up. We want to see volume there. Why? Why there? Like I said, I'm going to cover this in the next lesson. Resistance level. Stock has a hard time getting above that. People do not want to pay this price. People are not comfortable. People are not comfortable. People are not comfortable. Boom. The price goes above that. Are people comfortable? Yes. Yes. More and more people interested. That's strong. Another example. If you guys look right here. Demand zone. You can see stock goes, buyers are holding the stock up, stock is going right into the demand zone again, and we're going to go over demand zones next. Demand zone gets broken. As it gets broken, what happens? There's a sell-off, stock starts going down. Is that a strong move down? Yes or no? How do we know? Volume. Volume is surging. If you look at volume here, you can see volume starts surging. That is a strong move down. Now, if you notice something with volume here, right? Volume doesn't just randomly just keep going up. It doesn't just, the bars just don't keep increasing, right? But if you look at volume, you can see moves down, holds, consolidates, takes a break, rushes down, right? On big days, there's volume spikes. On big days, there's volume spikes. On big days, there's volume spikes. And on the move down, you can see volume holds, volume holds. That's a strong move up. And you can see, look at how the volume starts picking up. More activity. There's more activity while the stock is doing what? While the stock is going down. Very, very important. Now, just to recap everything, volume is very, very important. Volume is one thing that we should always, 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 always focus on. Being able to understand volume and apply it in our trading is going to help us out a lot. Like I said, at the end of this whole chapter, I am going to apply different concepts so you guys can see everything happening live. But for now, I want you to just understand it. If you're still having a little bit hard time, just stick through everything, and I promise by the end of this full chapter in putting it together section, I'm going to start putting everything together. I'm going to start showing you live examples so you start understanding better. So if you're still having a little bit hard time, just stick till the end of this chapter, watch that video, and then take it from there.